In cases where a long-established trend continues to make valid contact on the trajectory of the fan lines, it may still be possible to gauge changes in sentiment based on whether the trend is in the upper or lower half of the fan. Though this will be, of course, much less precise as the fan lines continue to spread out more drastically. Since this trend was quite stable overall, staying near the center line, the shift towards more neutral to bearish sentiment is still clearly displayed once there is a decisive break down into the lower half of the fan. To regain more precision, it might be useful in some cases to use a smaller portion of a large trend. It can be helpful when there are strong shifts in short-term sentiment when volatility increases. During the sharp drops in this relatively horizontal range, we could identify where there were higher chances of the chart getting back on an incline with at least a minor upswing point following drops that often went down through multiple fan lines. And we can still get similar results to the larger fan we used before in terms of identifying the approximate price and time range when bearish sentiment significantly increases, first by going under the center line and eventually going through the lower half of the fan. And unsurprisingly, even during such a strong drop, there is still clear, albeit short-term opposition near the areas where price contacts the fan lines. Forming a flatter fan based on a wide range like this is quite helpful, but the close proximity of fan lines to each other near the beginning of the fan can lead to some distortion and lost precision during some more volatile periods, such as near the peak here. So ideally, just like a normal trend line, it would be best to have a defined and moderate slope close to 45 degrees. Fortunately, the conditions are present here, and it helps more clearly identify the moderate to strong bearish sentiment during this downtrend that stays mostly within the lower half of the fan. And because of the great conditions the Fibonacci fan is based off here, the fan line projections were quite accurate in identifying the approximate slope of the downtrend continuation. And as usual, even with such great conditions, precision and the usefulness of the fan will diminish over time as the lines spread further apart. As we've seen before, the benefits of using a Fibonacci fan based on a trend line close to 45 degrees is that little to no adjustment is required. We could simply just use the first two downswing points and leave the fan the way it is since there was no major break into the upper half of the fan. Again, we can use a smaller portion of the larger trend to get more recent context and precision. However, in this case, adjustments are required due to the more extreme contrasting features of a steep drop followed by a prolonged horizontal range, as opposed to price following the more preferred trajectory closer to 45 degrees to allow for the fan to be used as a balanced gauge. Similar to before, the fan lines help identify when the chart can get back on an incline, and the areas that are over the center line more clearly present a stage of moderate to strong bullish sentiment, whereas a break into the lower half signifies a drop onto a much shallower incline. And the approximate trajectories of possible shallower inclines are represented quite well with the fan lines in the lower half of this Fibonacci fan.